Know the difference with Annex Wealth Management? The R in RMD stands for required. No messing around. It must be done. But when? Eric Strom, Financial Planning Manager at Annex Wealth Management, also a CFP, and he's got an excellent blog post at annexwealth.com covering 6 reasons why you might consider taking them sooner than later. Hello, Eric.
Hello, Danny.
I guess the first question is, do most people wait till the end of the year, and why?
Once you're age 72 or older under current law, generally you're required to take certain distributions out of accounts. And it is common to wait towards the end of the year to take these distributions. That's advice that's been around for a long time. Get as much growth as possible. And for many people, Danny, it is the right thing to wait until the end of the year. However, there's not enough talk about the advantages of taking your RMD earlier in the year. For some, that's the right thing. So we're going to go through some reasons today, right?
Yeah, we're going to go through one by one. And the first is you may want to do a Roth conversion during the year.
That's right, because no one knows what's going to happen in the markets. Markets go up and down. For example, during COVID, we saw a steep market decline at one point, and we were helping many clients do Roth conversions. That's where you're converting some of your pre-tax assets to Roth. When we see severe market declines, that's a great time to do Roth conversions. But did you know, Danny, that you can't do a Roth conversion if you haven't yet fulfilled your RMD for the year? So for some folks who are interested in doing that particular tax strategy, taking that RMD right away gives you a good posture and setup to be able to snap and do those Roth conversions as soon as we see those market dips.
Reasons to take an RMD earlier than year end. You may pass away during the year.
Yeah, here's one. So none of us know exactly how long we have on this planet, right? Once you're taking required minimum distributions, guess what? If you pass away during the year and you haven't yet taken your RMD, your loved ones and beneficiaries are going to have to do that for you during a time of grieving. That's a big reason why it sometimes is good to just get that RMD done out of the way earlier. That way, you know, at least you've got that peace of mind that your loved ones won't have to have that on their to-do list.
Another reason you write about in the blog post to consider an earlier than year-end taking of an RMD, you may want the freedom to spend your distribution earlier than December.
Yeah, that's right. So, Danny, some folks are just not even aware that it's an option to take an RMD earlier in the year. That's the good news. You can actually take an RMD anytime during the year. Many people are actually using their RMDs to spend. Maybe you're going to be taking a trip or you just need grocery money. You can take that RMD anytime you want. So January, February is fine.
This should be the fun part, right?
Yeah, exactly. This is your money. Let's spend it.
Eric Strom, Financial Planning Manager at Annex Wealth Management, also a CFP. Great blog post at annexwealth.com covering reasons to consider taking your RMD earlier than year end. You may want to use your RMD to pay taxes.
Maybe you have some dividend income or you have capital gains from investment accounts that are outside of IRAs. For folks like that, or maybe you have a small business or rental properties or other types of income where you cannot do withholding. In situations like that, sometimes people need to make what are called quarterly payments or estimated payments. I'm sure you've heard of that. But did you know that one alternative to that is that you can use IRA withdrawals or other account withdrawals that offer withholding to help pay towards that tax liability? Some people don't want to bother with paying quarterly payments. It can be a hassle. So an RMD actually for some can be an opportunity to maybe withhold 50% or even 100% of your required minimum distribution to help pay that tax bill. So that's something at Annex that we help a lot of our clients with.
Last reason not to wait that we'll talk about, you may want to donate your RMD to charity, and this brings people a lot of pleasure to do things like this.
It really does. So the Secure Act passed a few years ago actually backed up the required minimum distribution start age to 72. We're all probably aware of that. But at the same time, once you turn 70 and a half, you can start making something called qualified charitable distributions, or a QCD. What's nice about a QCD is that you're donating directly to a charity from your IRA, meaning you're pulling that money out of the IRA. You remember, you got a tax deduction a long time ago for that money. Now, if you pulled that money out to spend, you would pay taxes on those dollars. But if you donate those dollars directly to charity from your IRA, you don't pay any tax bill at all. And here's the other part. If you have an RMD obligation, you can offset that with your QCD. So QCDs are extremely powerful on both fronts, and particularly because of the Tax Cuts and Jobs Act that's been around for a number of years now, many people aren't even getting an itemized deduction for charitable contributions anymore. So this happened to my wife and I. We used to itemize our deductions before the Tax Cuts and Jobs Act. Once that was passed, we couldn't do it anymore. So if I donate to a charity, I don't necessarily get a deduction anymore. The QCDs are a way to recapture that, as well well as get that offset of the RMD as well. So lots of good benefits there. If that sounds like something intriguing to you and you're 70.5 or above, definitely talk to your financial planner about that strategy.
What is the process? How long does it take to take an RMD? Is it days, weeks?
Oh, no. You just contact, your financial advisor if you're a client of Annex, for example, or your custodian, and you just request a withdrawal. And the custodian or advisor will generally calculate your RMD obligation for you. So they'll say, hey, it's $20,512. It's just a phone call away. Just call them up or go online and request that withdrawal.
The scary part about the RMD, if you don't take it, there's a big penalty.
Oh, it's very big. In fact, it's 50% of what you were supposed to have taken out. It's jaw-dropping, in fact.
Jaw-dropping. Yep. Again, that blog post up at annexwealth.com. Visit the site. There is a lot there for investment, retirement planning, tax planning, and estate planning. We do it as a fee-only fiduciary. Know the difference. The website, annexwealth.com. Click that Get Started button. Eric Strom, Financial Planning Manager and a CFP at Annex Wealth Management. Always appreciate your insight.
Thanks, Danny.